Do you want your chart to look as professional as the left-hand side of my screen, or do you want or would you like your chart to look as choppy as the right-hand side of my screen? Right. Anyways, you already know the answer. I will leave that with you to decide. But what I really want to show or share with you in this video is how you can reduce your stress level and panic in the market and get a lot of gains or profit from the market, irrespective of how choppy it might look. But as long as the pressure is there, you might not be able to tell the pressure right away. But if you can trade the pressure itself, that would give you a lot of momentum and that would give you a lot of stability. All right, with all that aside, anyways, this is Deno Trader. I just want to share with you what I personally use and how I find it useful and how I think or why I think it might help you in identifying trend direction, strength, and as well as boosting your level of confidentiality or confidence. Okay, on the left hand side of my screen, I have this chart painted yellow or rather green. I mean, not green, not green. Well, yellow, which of course on the edge green, but most importantly, uh, it's all Heiken Ashi. If you don't know what Heiken Ashi is, it's just a candle type or a candle chart pattern, which is right up there. I will show you how to get all this set up. There are three things we need. Actually, there are two things that we need. Only two things. Okay, but if you look at my left hand side chart, there are a few more components or elements. The first element I want to talk about is this writing here that says potential uptrend or potential trending day or a potential strong rally. Okay, that just tells me right when the market opens. That's what I want to see. I want to see a strong. I want to see something like this shows up or nothing at all shows up. If I see nothing, I just know that it's going to be a weekday. If I see something, I know there's going to be a rally. It could be up, it could be down. But then for me to decide which direction is going to go, I have this blue thick line, which is called the opening range breakout or the open range breakout. I have this in such a way that whichever side the candles or the second candle breaks to right after the market opens, that might be the possible direction or the side that the market will follow for the next few or for the rest of the day. In addition to that, I have this green moving average, which is called the triangular moving average. TAM. We'll talk about that in the next few when we start setting up your chart. Let's use the right hand side of my screen as your chart. We will transform your chart into my chart, which is the left hand side. And then finally, I have this red line here, which is just the regular VWAP, but I've painted that VWAP red just in case you're wondering. So the point here is that when we see a yellow candle, we want to trade that with confidence. You just need to find what point you want to enter. As long as the candle is opening in the middle of the previous candle, we are good to go. That's all we need. We know for sure the yellow is telling us a lot of story. As long as it's yellow, that means in this setup, it means that there is enough buying pressure to push the market in the direction of that trend. In my case, yellow means positive, blue means negative. So as long as the yellow one is opening, the next candle is opening in the middle of the previous one, that just means there's a way enough momentum, volume, and pressure to push the market up or to push the market to that direction. Okay, and you might be wondering if this is really a high Kanashi candle, why are some of the candles still not painted here? This is green, completely green. This is an example. This is not painted because at this point, the buying pressure is equals to the selling pressure, making this a doji which is neutral. You do not need to actually worry about this because we are, of all things, we are above this green moving average, triangular moving average. Okay, and the the exit. Well, there are two things we need to talk about actually. Two more things. The first thing is the breakout structure, which is at the market opening, which that breakout structure might come before, might come after a doji candle or without a doji candle, depending on what happens. A doji candle is more on the entry and the exit position, but we'll talk about that in a second here. In the opening, we don't worry about the opening. We don't worry about the doji or not, because we know it's the first candle of the day. We don't need it. We just need a breakout structure. When we are in the trade, we are looking for a doji, and this would be one of those doji. But remember, this doji is still positive because it's green. We do not need to panic about this, and we are above the moving average. We are above the triangular moving average. Up there, we are above the moving average and the triangular moving average, but the distance between the VWAP, the distance between the VWAP and those doji is quite too far away. So that is alarming. Okay, and remember, normally trading with this strategy, you as the next candle open in the middle of the previous candle, it is building a stairs. Okay, you want to find that pattern where the candle fails to build a stairs, or the top of the candle is nearly all the same. Of course, we have observed that at this point here, the top is exactly the same, and that was, of course, followed by that, but that still remained positive. If you're trailing your stop loss, don't trail too close, maybe one candle away. And remember, I am trading this on a 15-minute chart. You can also still trade this on a 10-minute chart. It will still be positive, but a little bit of a noise. You will observe a little bit of a noise. And like I said earlier, you see these candles which are not painted. Remember, the real selling pressure, when the candle is red, that's not a problem. But when the candle is blue, that is a problem. Okay, when the candle is blue, that's when you start panicking, or not really panicking. You don't need to panic. That's when you think of exiting your position. Just red candle, normal, absolutely normal. Let me put this back on a 15-minute chart so we're not having a lot of noise and drama to deal with. All right, so you would write that, and then you reach that point where you have a doji with a really long wick or with a really tall wick, but of course followed by another doji. And then we see a blue doji. That blue doji indicates just an extreme selling pressure. Okay, and at that point you want to really, you don't, if you haven't exited before, you want to exit right away. But one thing that would help you a lot, if you're trading a market which has been trending upward, you want to exit when you reach the previous day high or a region of the previous day high if you're trading calls. But also at the same time, if you're trading put, you want to exit at the region of the previous day low. Okay, without wasting a lot of your time, well, let me talk about one last thing before we continue and set your chart up to look like the right hand side to look like the left hand side. Okay, same thing applies to the bearish market or the bearish trend. If you have the blue candles, you have a lot of volume, momentum, and pressure, which is driving the market, and also the candle size tells you a lot. And here you see that there are some absolute green candle which are not painted blue or red. Okay, but because it's below the triangular moving average, okay, we don't need to panic about that. But everything is sitting at the VWAP, this red line, that's the VWAP. Everything is sitting at the VWAP, and that's not a problem. So the VWAP in this case is working as our level of support, or a level of resistance, a resistance level in this downtrend. Okay, and with that in mind, that brings us to that. And of course, we do have a yellow, which is forming up, and followed by that green, which is things are starting to turn around to be more positive. But of course, we haven't seen the doji itself. So if that breaks above that line and we see a yellow, we enter the trade. Okay, because not every market gives you a doji. There are markets that will not give you a doji and just right away turn around and start riding. Okay, enough of that talk. Let's get to set your chart up. First thing I want to do on the right hand chart is I want to remove every indicators. Um, and we have removed the indicators. The first thing we want to begin with is adding what we call the RSI. The RSI that we're adding is a very particular RSI, which is designed by this one particular, or developed by this one particular user called uh, Glass. Okay, so to do that, hover over, go over to the indicator section of your trading view, um, and on that, go to the community section of the trading view, and in the community section, you're just gonna go ahead and type RSI. Okay, after you have typed RSI, you see this Glass. Okay, that is the RSIs that we're looking for, which is RSI candles. You're gonna click on RSI candles by Glass, and that will add to your chart. And after adding that to your chart, you're gonna go ahead and either favorite or favorite before you do that. And then after you've added that to the chart, let's set this up, and then we will add the next indicator. Okay, and right away you will see that this indicator really start changing the color of the chart of the candles right away from light green to deep green. Okay, that's not what I'm going to work with. I'm going to work with what is more different from the regular, not even close to the regular color. The deep green is close enough to light green, and I want something brighter. So I'm going to go to the indicator here. I'm going to click on settings. In the settings, I'm going to go ahead and change the color for green, which is the uptrend. I'm going to change that to yellow, which, boom, we are already starting to replicate the left hand side of the chart. Okay, and then for red, I'm going to go ahead and click on that, and going to change that to blue right there. Okay, and after changing that to blue, it's not somehow replicating, but that's okay. After changing that to blue, we're going to go ahead and change the input length from 14 to 2, just 2. Okay, after we've changed that to 2, everything has started displaying. Let's go ahead and just leave everything else the same as it is. Okay, and just go ahead and don't change anything else, but hit OK. That's what we want. After we have hit OK, we do know now we will see that we have pressure and pressure and pressure, some pressure. um, this is telling us that there is a buying pressure, but there is really a true range of this buying pressure that we should focus on. When we see this true range is going to be categorized by a specific color, which in this case we are saying green. I mean, green is going to transform to yellow for the uptrend, and red is going to transform to blue for downtrend. Okay, and then remember, see how you leave those middle part isolated. That just means it could, it's a 50-50 region. You don't need to do anything with those. It's a 50-50 region. When you see those kind of things starting to show up, it's a point of no interest. It's not a trading zone. It's not area of value. And so it's in general area of reversal. That's what it's telling you. All right, next, let's move to the next candle. The next candle that we want to get is the moving average. Okay, we want to get the moving average, and to do that, again, we're going to go back to the indicator section, which in this case you can press the / on your keyboard after that, and go to community tab. In the community tab, just go ahead and type the moving average. And by just typing the word moving, we are looking for this, or you can type the whole word moving average, but then you're looking for this Renko moving average RMI alert R3 by just Uncle L. Just Uncle L. You want to get that, grab that actually, and click on it. You might want to favorite actual as well, and then click on it so that it's on your favorite. After you've added this, look how wonky that looks a little bit compared to the right hand side. The right hand side is quite very smooth. It's quite very smooth, and also the I mean, the left hand side is quite very smooth, but the right hand side has a lot of things. It tells you where to exit though, and also it tells you where to enter. Okay, for example, you enter here, you exit over there, which is good. It's good, but I don't like to use those, so I'm gonna get rid of that. If you want it, you can leave it, but I think it might mislead you for a moment. We'll see how that plays along. So for you to edit that, you're gonna go ahead and you can go to that gear icon over there, which is settings, or you can bring your cursor to the line here itself. When you see the little hand, double click on it. When you double click on that, that will bring you to this point. And remember, we have this buy signal, we have that exit signal over there. I just don't, because I don't want it, I'm gonna uh, check on those box to remove those buy and sell exit signal. And also, I don't want the label to be at the side of my screen over there. If you look at the right hand side, I don't want those labels to be there telling me what price it is. So I'm gonna uncheck those so that I'm only seeing the actual price, market price. Okay. The next thing I want to do is I'm going to disable the um, let's start with the buy signal. I'm going to disable the buy signal, and I'm going to disable the sell signal. The one thing which is important though, which I'm going to leave, is this daily open. I might just change this color to white for my screen purpose, because I'm using dark theme. And then when I have that like that, that is actually going to be your opening range, which is your mini opening range, which you can just draw another line below this. Okay. That is your opening range, which is a very important thing actually for you to have. Um, the next thing that we are going to do is that we are going to go back to the input tab. Okay. On the input tab, we are going to change the moving average type from exponential, which is EMA, to TMA, which is triangular. When we change that from EMA to TMA, the benefit here is that TMA generally smoothes the trend. It smoothes the trend and smoothes the signal, just like the RSI will do. The RSI smoothes the signal, the TMA also smoothes the signal. So you have in general, you have a smooth signal. Okay. After adding these two things, after we have added these two things, well, click on OK. The next thing that we want to do, or the next thing that we are apt to do, is click on this chart type up here, or bar style, at the top of your screen right here. In the bar style, go down to go down the list and look for Heiken Ashi. In my case, or for my case, I've used I've have it as my favorite. You can go click on that star, and then that will add it to your favorite. And then click on Heikenashe itself to add it, to add that to, or to apply that to the chart. Let's apply it. Boom. Now the right hand side is looking pretty much like the left hand side. Okay, and which is exactly actually what you need, or what I'm intending to show you. The blue line here is my custom indicator, which is just actually, it's still the opening range breakout, which you already have here as this white line. The only thing you're missing here is to draw one line at the bottom of that same candle, and that will be exactly the same. Okay. And for the bear, I mean for a bearish day, you will have this on the other way around. We'll take a look at a few examples here. The only downside on this setup is that we cannot replay the bars, so that, so that we can confirm how easy we can enter trade, how simple, I mean how hard we can enter trade. But I've used this, I've used this, I've checked it multiple times with this side by side, the regular candles, and as well as the smooth setup. This works like magic. So, with that in mind, you're entering a trade when you see a doji, or when you see a color change after a doji, and the candle that follow has no wick at the bottom for uptrend, or has no wick at the bottom for bullish, and the other way around, the candle after the doji has no wick at the top for bearish. That is your entry signal. You enter that on a shorter time frame and just stay in the trade until when you see a doji forms in on the other way, which is not in your favor. Let's take a look at something here real quick. Actually, we might not have enough time, but with that in mind, this should help you turn a little bit of money into a large amount of money by just entering at this point, and buying at this point and staying in the trade, and exiting when you are done with the market or exhausted the trend. Okay. With that in mind, the best way to support me is to like this, share, or subscribe. And I will see you later. Okay. Thank you for watching and